Welcome to the Orange Wheel podcast, where we support business leaders in understanding the monetary transition. I'm joined today by Torbjørn Bull Jenssen of K33. How are you doing today?
I'm doing great, thank you. Nice to be here.
How's the weather up in Oslo today?
Oh, it's raining. It's not too cold though. It's like 10 degrees Celsius. Last week we had like -4, so winter is coming.
Okay, getting the cross-country skis waxed up.
Oh yeah, they are ready to go.
Fantastic.
Just waiting for the snow now.
Cool. So Torbjørn and I, we met, I think, initially in Prague at Bitcoin for Corporations Day briefly, and then have corresponded a little bit since then, given that we're both here in Scandinavia and both into the corporate Bitcoin adoption space. And we got the chance to meet again in New York last month at the Bitcoin Treasuries conference. That was a lot of fun.
Yeah. It was a great conference and a lot of, really good time.
Yeah. It was kind of an all-star lineup and really intimate setting. So I'm looking forward to seeing more events like that in the future. So for the audience who might not be aware of yourself and K33, it'd be great to hear just an introduction of yourself and your company.
Yeah, no, absolutely. Personally, I'm a macroeconomist by education. And I'm something as strange as a macroeconomist with a deep belief in Bitcoin. So I ended actually up doing my master thesis on Bitcoin back in 2013, 2014, and I've been in the rabbit hole ever since. K33, where I'm the founder and CEO, is a exchange or an OTC service for a fiat on-ramp and off-ramp. We're also offering custody, market research, and asset management. So we're working with kind of corporate clients, high net worth individuals, financial institutions, bridging the gap, if you like, between Bitcoin and traditional finance. Yeah.
Very cool. Awesome. And K33 itself does also hold Bitcoin on the balance sheet itself, and it's been
absolutely. So I mean, we're a publicly traded company listed on Nasdaq in Stockholm. Our head office is in Oslo. As a broker and exchange service, we have strong operational alpha or synergies with kind of pairing it with a strong balance sheet. And to us, it made sense building that balance sheet in Bitcoin. So we currently hold 140 Bitcoin on our balance sheet. The longer term target is to build towards 1,000 Bitcoin. And the rationale for us is twofold. One, we are strong believers that Bitcoin will continue to be the best performing asset in the years to come. But secondly, we really can scale our business more efficiently by using the Bitcoin as collateral. Not collateral for risk taking, but collateral for liquidity provision, match principal trading, and basically becoming a better partner and better venue for our clients.
That's great. I think it's really interesting to hear about the operational applications of Bitcoin itself, whether it be for financial services or integrating into payment systems and so forth, to really see it not exclusively as this kind of like capital asset itself, but also seeing the applications of it. It's really cool to see that.
Yeah, and I think you're going to see, especially for treasury companies, we're now quickly seeing the second phase. The first phase was about kind of acquiring as many Bitcoin as possible, printing shares and buy more Bitcoin. Right now, you see a lot of these companies trading below net asset value. You see a lot of them having strong balance sheets. And now the next phase is how can you generate a yield, a return on those Bitcoins without taking undue risk? So of course you can leverage them, but any investor could. But what you can do as a business is you can truly kind of use it in your operation. And there are many different business models where you can put your balance sheet to work. Match principal trading and liquidity provision, as we do, is one, but I think there will be many others out there. But I think like the main focus for the treasury companies going forward will be to do that, while at the same time working with corporate clients. We see more and more normal businesses actually adding Bitcoin as a saving tool. And not as 100% of their reserves, not to be the main value in their company, but to make sure that they actually have an asset that they expect will appreciate over time, that serves as a diversifier in their portfolio of liquid assets and investments.
That's great to hear. And, I think it's interesting to think about that kind of maturity journey of understanding the Bitcoin thesis. Right? And I think maybe that, not that every company will ultimately end up in a maxi position where all of their liquid assets are in Bitcoin or they're operating on a full Bitcoin standard. But certainly the direction of travel, I think, tends to be towards having a greater share of Bitcoin in your capital reserves. Companies starting even as a small allocation, I think, is a good signal. Maybe just give some flavor on the types of businesses that you're seeing beginning to adopt it as a component in their treasuries.
Yeah, so I think for us, apart from, we're working with like a handful of other treasury companies that are publicly kind of listed that are using us to buy and to custody their Bitcoin. And we also offer kind of full on-chain segregation, bespoke withdrawal rules, kind of a lot of tooling that they really appreciate being public listed. For the private companies we see, Those are typically founder-led. And we see a lot of service companies like carpenters, doctors, others that have their own personal company. So they're kind of like they have their business. They might be self-employed or they might have a few employees. We have a hairdresser saloon, for instance, that has kind of a franchise that take like every month a part of the surplus and invest in Bitcoin. And you naturally see it from these smaller companies first because they have a single principal that can get orange pilled or like see the possibility with Bitcoin and then make that move. What is interesting, however, is that when you have these first movers, both in the kind of the public markets, but also in the private smaller companies, you have a lot of accountants, a lot of auditors, a lot of kind of the service providers for companies suddenly being forced to get up the learning curve of how to handle this. So suddenly you have a hairdressing kind of franchise concept, and suddenly the accountant there have to figure out what are the rules for how we put Bitcoin on the balance sheet, how do we value them, how do we treat it tax-wise. That's a knowledge this accountant didn't have in the past. When they have it, it's suddenly easier for the next company to follow. And this is why I believe that over the next few years we're going to see like a catch-up effect, because it's going to become easier and easier to be the follower because more and more of the hurdles have kind of already been kind of brought down. It's like walking through deep snow. The first guy really has a heavy job. The second guy, slightly easier, but like when you're the 10th or the 100th person, it's like a highway. It's like so easy. Yeah.
Really great perspective there, right? Because I guess there's the rippling out effect that happens through competition. I think when maybe the bigger businesses where they start over time seeing that their competitors who have adopted Bitcoin are outperforming them using the balance sheet as a competitive tool. But this is really another interesting perspective, that kind of rippling out effect of the service providers. And
yeah, and I think also like I think the service providers is actually the main bottleneck, to be honest, because there's a lot of people who want to move in this direction. So for instance, we have a big family office, or decently sized, not big in global scale, but like it's a decently sized family office where the principal has decided he wants to rotate half of the balance sheet, like a few $100 million over time, into Bitcoin. His challenge is that normally when he says we want to move into this, like his board, the people working in the family office, they know how to execute. He can then set the agenda and the strategy, and the whole machinery knows how to run with it. For this push, however, his whole team is a bit like, okay, you decide, but tell me how. Like, okay. And then suddenly he's sitting there like, well, when it comes to like, do I borrow some money? When do we sell off this property? Do we kind of leverage on the Bitcoin and the property? Like, how do we solve the kind of the mechanics of it is what is the main bottleneck. It's not the belief in Bitcoin. It's not a worry about over-indebted fiat currencies or geopolitical tension, the risk of aggressive taxation from governments. Like the person is the principal is completely sold on this, but like the speed of rolling out is kind of really hampered by the lack of kind of knowledge in the corporate running of things.
That's awesome to hear that. The kind of why is becoming more and more clear, but the how is still, especially in less mature jurisdictions, I guess, right? Particularly here in Europe, I guess, where we've kind of become a bit behind the ball.
Yeah, and I think also, like, I mean, and this is not just an hypothesis, we have the proof. The ETFs in the US is the proof because they became extremely hot overnight. And what that told us was that the second you had an instrument which was more easy to integrate in the different portfolios, in the different investment mandates, etc., from those who bought it, then suddenly you saw massive inflow. So it was a bottleneck, like people didn't know how to deal with real Bitcoin, unfortunately. Hopefully they'll learn and figure that out as well, because that's the only way to get the kind of true benefits. But by then having kind of the financialization of Bitcoin and the securitization of Bitcoin, where you took Bitcoin and put it into a kind of publicly traded kind of share, suddenly it became easy to adopt. So the demand was there. There was a friction hindering that demand from kind of being satiated. The friction was brought down. And now the Bitcoin ETF is the most profitable ETF for BlackRock across all the ETFs they have.
Yeah, it's unbelievable, right? I think us in the Bitcoin community are well aware of this, like fastest growing, most profitable, all these things, right? And yet I think it's still underappreciated in the broader financial community, right? But it's ultimately going to become well known.
And I think what is underappreciated is what effects this have. Because the effect of this is that you then have a lot of salespeople in these organizations. They don't necessarily believe in decentralized finance or self-sovereign kind of financial system. But these salespeople, they suddenly are pushing this on funds, on different types of clients. We recently saw Morgan Stanley now advising for the active portfolios at an average allocation of 4% to digital assets with a main weight in Bitcoin. We see now the ETFs becoming available on London Stock Exchange. I mean, we see, because of BlackRock and others proving the profitability of it, the rest of the whole ecosystem follows after because they want to make their cut as well. It's game theory, it's incentives. Bitcoin, like if you adopt Bitcoin early, you make money, and that is kind of at a very high level kind of Bitcoin's main self-propelling kind of energy source. It's
it's a beautiful thing, right? And it's amazing we've gotten here without having at the beginning any real sales team like most financial products do, right? But now there is more and more momentum from the traditional sector behind it. Speaking of the ETFs, in some of your recent reports, you talked about how in this kind of recent pullback in the Bitcoin price, the ETF investors have been more stable, whereas it seems like retail is a bit more panicky or willing to kind of sell. What does this divergence tell us about market maturity?
It's maturing. It's still immature in the sense that retail and especially highly leveraged traders can have substantial influence on the price short term. They've had some massive liquidations recently.
Yeah.
But we see more and more institutional participation in the ETFs, more and more a long-term view kind of through the ETFs. Initially for the ETFs, there was a lot of retail demand. But as we get funds that decide to say like the Luxembourg Sovereign Wealth Fund that decide we're going to have 1% in Bitcoin and we're going to do it through the ETFs, then suddenly you have actually a natural buyer. If Bitcoin falls, then suddenly it's not filling 1% of their AUM anymore. Institutional money that will actually then increase exposure in downturns. But also, on the contrary, like they will sell if it kind of runs away. So I think right now, most of the institutional money is on the sideline. So I think we can have like a substantial kind of lasting, with volatility, kind of appreciation of Bitcoin as you get the entry. But as more and more institutional money has been allocated, I think you'll see a massive suppression of volatility. Because for the first time in Bitcoin's history, you're going to get natural sellers when price appreciates and natural buyers when it falls.
Yeah, and I think that maturation is what's needed for ever increasingly large investors to be willing to get into it, right? So as the volatility decreases, then they'll say, now we're willing to move forward. So it becomes also this kind of self-reinforcing.
And the volatility decreases because real liquidity increases. And real liquidity increases is what enables larger allocations, enables larger players to actually participate. I mean, I'm of the view that Bitcoin can become the kind of new global reserve currency down the line. But it cannot do that with the current level of liquidity. I mean, the market value is a tenth of gold. And gold, I mean, we see how gold is now rapidly becoming relevant again as a global kind of reserve asset. So gold at its current cap is not really filling that role of a kind of active global reserve asset because it's dominated by the dollar. Bitcoin needs to do a 10 to 100x from here in not only price. Well, the 100x will take some time, but especially kind of in market depth, in kind of liquidity, in maturity.
Yeah, and I think when it's interesting. I kind of follow what large central banks say about Bitcoin. Every once in a while, a journalist will ask them, will you ever consider Bitcoin as a reserve asset? And the sentiment, I think, 5 years ago was like laughed at. It's like preposterous. So they weren't even asked it, right? But now it's kind of like, well, it's too volatile. So like there's a characteristic there that's actually being kind of pinpointed. And I think as we recognize, like that volatility and liquidity and depth of the market is just continuing to grow. So at some point, that will no longer be a reason why not to do it, right? So, and there might be more ideological reasons why not to, but I'm kind of with you that the game theory will play out in a way that will incentivize the holding of that. So yeah, very, very, very cool to see that. I mean, speaking of these, I mean, in Norway, the sovereign wealth fund Norges Bank, they've been holding MicroStrategy stock in their portfolio.
So the Norwegian Wealth Fund is indirectly exposed to around 7,000 Bitcoin through MicroStrategy, but also Tesla, Coinbase, other publicly traded companies with Bitcoin holdings. I don't think that should be interpreted as the wealth fund seeking out Bitcoin exposure. It's so large, it's so well diversified, it's so broadly exposed. I think what it tells us, however, is that Bitcoin is actually becoming a part of every portfolio. And the question is if you want to be passive like the oil fund or active But regardless, it will come into your portfolio if you are well diversified, because it's becoming a part of the economy and it's becoming a part of the broader society.
Great. Yeah, that was going to be my question. So I think you answered it, right? Was this kind of a active decision, or is this just a fact that they have certain constraints in the way they manage their portfolio, and just by virtue of those criteria, it kind of ends up there? And so you kind of answered that question.
Yeah. And it's interesting, right? Because a lot of central banks are now kind of seeing gold as more relevant than historically. But in Norway, it wasn't much. I think it was like 1% of the central bank reserves back in 2004. But then Norway sold the rest of its gold reserves.
As in Canada. So
yeah. And I think a lot of economics forgot about power. They forgot about money in a context of power. And they narrowed their focus down to monetary policy as a tool to manage the business cycle. I think, unfortunately, with the geopolitical tensions we see around the world now, that money and power becomes more and more important, which is why I think gold is rising. Because, well, one of the benefits of gold is that there's no counterparty risk. If you hold gold within your own borders, there's no seizing of those funds by a foreign power. Bitcoin have the same capabilities, but I think for those who don't appreciate the value of gold as a monetary asset, it's very hard to then jump to appreciate Bitcoin. You kind of have to go through first understanding kind of the least common denominator, the apolitical nature of gold, to then start to play with the idea, well, gold has a few thousand years of history, more than Bitcoin, but it's not digital and not programmable. It's a more mature market, but Bitcoin has the extra upside of actually continuing its adoption journey, and then kind of make your decision between how you would like to combine. Like, first, do you want gold at all? And then figure out how would you like to combine the physical and the digital gold. The digital, not as in an ETF or anything, but as in Bitcoin.
Totally agree. And I think it is fascinating that we're living through this event and this kind of resurgence of the interplay between geopolitics and economics. And I've used the term, it's the end of history. I mean, Fukushima wrote this book back in the 90s, I guess, right? The end of history, saying, the Soviet Union's collapsed and now we're all going to be liberal democracies. We're all going to trade with each other and there'll be no more war. And I think we went through kind of a Pax Americana phase that we could kind of believe that for a period of time. But, these things never last forever. And I think it's in some senses, it's, as you said, unfortunate that we're going through geopolitical conflict and tensions, and hopefully it's not a World War III. But the bright side is that in some ways it will. I think people are waking up to the value of gold again. And that will also, I think, through time, make people, as you said, understand the value that gold has, and then understand better the proposition that Bitcoin has. But it is certainly fascinating. I think that's also the challenges we have with mainstream economists, right? I think they've been really brought up in this, only thinking about the world within a particular framework that makes certain assumptions about what money is, and that it can just be a debt-based obligation, right?
Yeah. And that's a challenge, right? When things are too stable, you become too specialized. But when too many become too specialized, that's when the whole system becomes fragile. That's how, like, kind of seems Taleb, like stability, or I guess Minsky, stability is destabilizing. And I think, when economists discuss more kind of the basis points in their estimates around GDP growth, that's when macroeconomists are focused on, will it be 1.2% growth or 1.1%? That's when you understand that, well, now we become too narrow. Now we're not seeing
the big picture, right? Anymore.
The big picture anymore. And I think, but I don't think we should downplay how it would be much nicer if the world continues to be ordered, to have global trade, because it's been a massive driver of wealth creation and increased mercantilism, less trade, more like call it almost like a neo-medieval type world order. It's not a nice world to live in. That will come with conflict. It'll come with degrowth potentially as a result of deglobalization. I think it's something to be aware of, something to plan for as an individual, as a family member, as a business owner, and as a citizen in a country. But it's not something to cherish or hope for.
I totally agree. And we can hope this whole thing de-escalates and we do kind of have some greater degree of cooperation. But certainly right now it does feel like the geopolitical tensions are escalating and that this greater and greater decoupling and antagonism between China and the US. So
so as we say in Norway, hope for the best and prepare.
I think those are good words to take heed. And I think Bitcoin becomes part of that preparation.
Absolutely.
For most people. So if we think about CEOs and CFOs and those who are maybe still dismissing Bitcoin or not on the radar, are there one or two particular reasons that you either see or believe to be the case that people are just not yet adopting? Is it simply just inertia? It just takes more time, or is there a lack of data conviction? You did mention the service providers were one element, but I guess that's on the how. But if we go back to the kind of why piece, where do you see the misunderstandings or barriers there?
So I think on the why, I think systemic risk aversion, as in not actually kind of aversion for true risk, but aversion for taking a contrarian view is creating a lot of inertia. So if you are the CFO or CEO in a big, well-established company and you have a large treasury operation, you're holding money market mutual funds, you're holding a lot of different instruments, the main reason why you wouldn't add a little bit of Bitcoin to that portfolio is because if you do, you have to explicitly defend it. You're going to get a lot of journalists asking you questions. You're going to get shareholders asking you questions. They're going to talk about energy consumption. You're going to get a lot of annoying questions. What you're not going to get as a board member or like a senior manager in that position is a higher salary. You're not going to get more warrants. So if you are sitting in, and this is particularly true in financial services industry, but also other industries, like if you're sitting really well positioned, you really don't want to rock the boat. So that creates a lot of inertia. Because you have everything to lose. I mean, let's say you do it and then Bitcoin tanks. It's a PR nightmare. So here in Norway, had back in the previous cycle, Kjell Inge Røkke and Aker, the largest industrial kind of investor, closest you probably come to a proper tycoon.
He is one of the world's wealthiest men, right? He's in the top.
In Norway, they took and bought like 1,000 Bitcoin at the peak during the previous cycle. And then Bitcoin collapsed. And then it became something they were not too interested in talking too much about. Now they're nicely in plus, even if some Bitcoins were lost on some ventures in mining in between. Like all in all, a great return on that investment. But I would be very surprised if anyone kind of apart from like this massive industrial conglomerate made any money from it. And for them, it is like a rounding error for everything else. But individually, because of the bad timing of the cycle, even though they were right long term, even though the shareholder letter preached a Bitcoiner philosophy that was written in the tone of voice of hardcore Bitcoiners. When you come to the earnings call, it's the bottom line for that earnings call that matters. And then if you take a contrarian bet and it goes against you for some quarters, you're really going to hear it.
Yeah. And I really liked that shareholder letter when it first came out in 2021. I kind of read the day it was released. Really inspiring. And I think it was quite balanced view because he was kind of like not guaranteed. He wasn't like a full maxi, but he's if this plays out, this is like going to be huge. And I think it's going to be quite prescient. I think down the line, 10 years from now, when people look back at that, they're going to be like, this guy knew what was happening and at least he had the balls to act on it.
Yeah. And I think that is a great example of someone will move first, but it takes years, sometimes decades after such a first move before it becomes commonplace. And that's why it's so important that Wall Street, for instance, makes money from this. Because when they do, that's when they can go out and guide on this. And when Morgan Stanley can guide active portfolio allocation of 4%, then suddenly it becomes palatable because you're not taking the reputational risk of saying my firm should allocate a few percentage to Bitcoin. It's like, oh, like we're doing the same as these guys. Like we're following this advice where you're going to get this tipping point, I think, where it's going to go from being something for the courageous, ambitious first movers, and then like it'll be almost like a tipping point where it becomes like a follow-on trade.
Yeah, I think of a few things here, right? But like the first one, just very specific, is like Vanguard, right? Because I think Vanguard was the one that's just saying we're never going to, like, they were so adamantly opposed to Bitcoin, really saying we're never going to touch it. And now I think they were like the last mainstream asset manager in the US not to. And then I think they finally had to bend the knee and say, okay, we'll allow our clients to have exposure to the ETFs, right? So, so we're starting to see evidence of that. And I'm with you when Wall Street's incentivized and these sales guys are incentivized, they're gonna work magic.
There's
right?
a whole army.
But the other one I think of is this tipping point idea. Maybe it's a bit cliche, right? But there's that picture from a music festival in the States from probably 20 years ago now or something, right? Where there's the one crazy guy dancing,
Yeah.
and then the second one joins in, and then it's just like there's more people joining the mosh pit than sitting out, right? So there will be that point where not being involved is the contrarian perspective, and
Yeah.
I think that's the beautiful thing about why early adopters can benefit from it, right? Because the rest of the world hasn't waken up.
Yeah, no, absolutely. And until it plays out, it's still an hypothesis. There's a lot of indication. There's a lot of kind of grounds to believe that broadly we will continue on this adoption journey. But there's always risk and uncertainty. And I think if you were very early, the uncertainty was much higher. Personally, I'm of the view that right now is probably one of the best risk-reward balance points for Bitcoin, because now it's just so much more proven in terms of kind of history. If it were to become only niche, if it were to fail, it really should have done it in its past life. When Bitcoin split into Bitcoin and Bitcoin Cash, there was an hypothesis that one of them, the sides of the chain split, would kind of continue to have credibility and dominate. But it could have very well ended up with like total loss of faith in both. You didn't know until it played out, but it survived that. It kind of survived brutal bear markets, financial crisis, outlived every new ICO trying to become the new Bitcoin. There's no projects anymore trying to claim they're a new Bitcoin. Well, other projects say, well, Bitcoin is the digital gold and money. I'm going to try to do this thing over here.
Taken, yeah.
And so it's been this massive proof through survivorship.
Totally agree. And so let's kind of play on that a little bit, right? So if there is a way that you think Bitcoin fails, right? If it's not yet kind of preordained or guaranteed and just a matter of time, what are if you had to guess, like one or two things that might actually make Bitcoin fail?
So this is the question I hate the most, because ever since I wrote my thesis, that's been what I've been struggling answering. And the reason I've been struggling answering it is because all of the things that I think about that I could throw at Bitcoin, I can also come up with kind of a potential solution for it. And just to take an example of that, let's say there was something deeply flawed about the Bitcoin protocol, as in kind of the network protocol. Or maybe everyone woke up and hated the energy consumption. In theory, you could see a transition where you would wrap the Bitcoins and migrate, all of the Bitcoins could migrate over to Ethereum or some other chain. So all of the Bitcoins can leave the Bitcoin blockchain, and you can still have Bitcoin with its 21 million maximum cap continue to live. So Bitcoin is not, it would be a very kind of shocking transition, but it's not locked to its tech platform and network. And this tells us this is primarily a kind of social consensus made efficient and achievable with technology, but it isn't its technology. So then the question becomes like,
something that transcends the blockchain itself in some ways. Is that?
Yes, the network is the social consensus. It's the same as for democracy in a country. Who decides that there is a democracy in Norway? Obviously not me alone. Obviously, if you had everyone but one guy, you could obviously change any law. Where is the cutting off? It's a social institution. It's a kind of agreed kind of social idea. It's a virtual rather than a digital phenomenon, which means that a tech failure could really make it hard to reach that social consensus and could make it break down because it could become too expensive to coordinate. But I think at the end of the day, it would need then to be some social kind of some reason for the social consensus to break down.
Trust. I guess that ultimately, if the trust is lost in the, let's say, technical aspects of it, but as
or the ability to coordinate, and agree on who has the ability to buy. Which, at the end of the day, that's what money is about. It's if you have the thing you call money, you don't exchange. Like, so you can exchange carrots for apples. That's like you bargain and you exchange. But with money, you buy. You hand it to the other person, and you actually kind of have the like you command that you can get the resources in exchange, and expect that. Then the main risk I see is for Bitcoin to fail as a project for freedom and self-sovereignty. And that would be if it became illegal to do self-custody for private individuals. There is a risk that we could move towards a future where you would only be allowed to hold Bitcoin in the basement of BlackRock and other financial institutions, where things like the travel rule, where you have to exchange information on sender and receiver, where you're not allowed to kind of truly use the blockchain natively, could become an issue. And yes, technically you could always work around it, but if that makes you a criminal, with the risk of being put in jail, that would really, really hamper Bitcoin's ability to deliver on monetary freedom, which I think is the most interesting part here. Absolute scarcity is nice, but gold is scarce enough. And if Bitcoin only becomes like a new gold from a scarcity point of view and not a freedom money, I would say personally, from my kind of view, that Bitcoin would have failed.
Yeah, so subscribing to similar to what Jack Dorsey has claimed, and I tend to agree with that as well. I think we kind of lead to the same challenges that we experienced with the gold standard. And Europe certainly seems to be moving in that direction. You mentioned the travel rule. I find it just super inconvenient to have to fill out these forms every time I'm Bitcoin around. But I guess to challenge that to a certain extent, would there not be some, again, game theory playing out at the political level where,
Oh yeah, I think it's unlikely, but it's not unheard of. And we have monetary examples of this. And I think what a lot of gold bugs are not aware of is that the gold standard in certain situations were imposed to control private sector. It was imposed on banks to control banking and finance through controlling the gold. And if Bitcoin ownerships becomes too centralized, if governments build too big balances, and if financial institutions hold too much of those balances, a Bitcoin standard, especially with kind of limited allowance for kind of self-hosted wallets, could be used as a tool of control. So it's important to kind of read deeply on history here and not just jump to the conclusion that this outside the central bank control of printing money surely must only be a tool for individual freedom, because that's not been the historical case in reality.
So we kind of somewhat related to that then. When it comes to corporate adoption, how do you think about it when like the decision point of actually custodying the Bitcoin or having it through a trusted custodian, so real Bitcoin exposure, whether it's self-custody or otherwise, versus the ETF? Do you think there's going to be a general preference, or what criteria do you think it depends on for different corporate?
I think for the foreseeable future, the ETF will be preferred due to kind of the simplification of how to get it up and running. But the ETFs come with jurisdictional risk. Bitcoins held in the US can be seized by the US if you're a non-US entity and worried about political sanctions either on your entity level or on your country level. You cannot really rely on a US ETF. If you also need the ability to kind of, for instance, move funds across borders, and most companies come into this through stablecoins first. But if stablecoins also become too political, too censored down the line, maybe you'll have to kind of doing import and export might potentially we kind of have to rely on a neutral settlement instrument that could be Bitcoin. But then you would actually have to have some service provider or manage keys in a way where you could actually move the Bitcoins freely to get those benefits. But I think for now, the securitization of Bitcoin will be kind of like the ETFs will be the main instrument for corporate adoption.
Yeah. So I totally agree with that. It'll depend, I guess, on a few factors there, to the extent to which the US is increasingly seen as an unreliable partner, I guess, right? I think that will be one uncertainty of how that plays out. And then the emergence of ETFs and ETPs in other exchanges and other jurisdictions. There might be a domestic preference to use a local option.
Yeah, and I mean, in Europe, we had ETPs for many, many years. I mean, like, especially in Sweden, the ETPs have been dominant for tax reasons. And that's actually another thing that we see very clearly, right? In Sweden, the market is dominated by the ETPs because they are heavily tax incentivized, which tells us that most of the Bitcoin and crypto investors in Sweden don't really care about kind of actually being your own bank yet and being able to kind of be on chain, hold your own keys. They cared about the financial exposure, and they were happy to get that through an investment savings account with tax benefits.
Very interesting. And yeah, so then I just kind of forgot the question I was going to ask as the follow up to that, but sorry. No, that's I've lost it now, I guess. So what? Yeah, stablecoins. This is it. Sorry, finally came back to me. So of course, there's been a big push for central bank digital currency in Europe now, and Christine Lagarde has come on. This was a few months ago now, but I think she's reiterated it, talking about monetary sovereignty being at risk if U.S. denominated stablecoins kind of really permeate into Europe, right? So I'm just kind of curious from a Norwegian perspective, is this at all on the radar about like a digital kroner or digital NOK? Is there a discussion at all, or is it a bit more about whatever Europe does, we'll just kind of replicate? Is there?
Oh yeah, it's definitely a discussion. It's not a political discussion. Parliament doesn't have a clue. But in the central bank, they said themselves that they've had kind of like two very clear wake-up moments. One was when Facebook announced kind of the Libra project because they saw that as a potential monetary competition from kind of Facebook with insane type of distribution.
Mm.
But then also with kind of the US pushing for digital dollars and kind of actively through the Genius Act and other initiatives, kind of now working to accelerate the adoption of dollar denominated stablecoins around the world. So Norway is a tiny country. We're 5 million people and we have our own currency. So it's very clear to the central bank that if that is to survive, the Norwegian krona has to have both an infrastructure, a value stability, and utility for both society, but also for households and companies that makes people choose to use it. Otherwise, you'll get dollarization kind of in a blink of an eye.
So the central banks have they been thinking about solutions and whether they'd kind of go the
Yeah, no, so they are exploring CBDC, they are exploring wholesale, they're working with both banks and some crypto players, they've been piloting some technology. I don't think the central bank will be the one launching it. It'll have to come from kind of the parliament, and it should come from parliament. And parliament is currently really behind the curve. There's no politicians in Norway
okay.
that I'm aware of that truly grasps how important the question of controlling money is and what is potentially at risk here, both kind of euro stablecoin competition, dollar competition, but generally how monetary competition is kind of rapidly changing. And also the interplay between tech companies and financial companies. Banks are now seeing real competition for deposits, their main source of cheap financing. Tech companies. So the whole landscape will change or can potentially change. There are kind of projects in the central bank, but I'm of the view that there's very few who kind of deeply internalizes how big this is. It seems that the US really know and have a history of knowing and understanding how to use the dollar to their advantage, and they intend to continue to do so. There's some on a European level that see this and try to do a counter move. Will they succeed? Highly uncertain.
Yeah, it's gonna be really fascinating to see how that plays out. And then also, yeah, on the kind of whole financial services industry and banks as such, how are they're at risk of being disintermediated, both from the central bank side if a central bank digital currency comes out, but also fintech. And I think, the narrative for my friends that work in traditional finance is like, well, we own the customer relationship, fintech will be in the back, old TradFi in the front. But if the younger generations are going straight to the fintech when they're saying, why do we need the old school bank, right?
Yeah, but I think for the longest time, right, fintechs had to have accounts with banks.
Mm.
So if you're a big bank, you're not worried about the fintech because that fintech company opens client accounts with you. So all the money is still held with you and it's still on your balance sheet. Nice. Someone else can take the high risk, annoying compliance of doing kind of retail payments or vetting for different types of investments, etc.
Mm.
It's a great division of labor for traditional finance. But what's happening now is that if you buy USDT, they don't hold reserves with a bank. They hold US treasuries. So then the money would leave the bank's balance sheet.
Yes.
And Tether in many ways act as a deposit institution, as a main competitor. So I think like when finance became digital with the internet, the structure remained the same. And the first generation of fintech, the structure largely remained the same. What's happening now with public blockchains is that the structure is changed and it cuts deep. And especially as you say, when then central banks open up for non-banks to hold central bank accounts and settle in central bank money, suddenly payment apps don't really need to have an account with a bank anymore. They can hold it directly with the central bank. So commercial banks and are kind of facing competition from both sides, both from their central bank and from global tech.
Very interesting to see how this plays out. It's very, very fascinating times. So much different stuff that we covered, from the geopolitical side to the Bitcoin adoption, obviously, both in terms of institutional investors, central banks, corporations, the banking industry, and how that's going to be transformed, stablecoin, CBDC. So really great conversation, covered so much territory. I guess just before we kind of close out, one last question, I guess. But like, if we think about the cycles of Bitcoin price, right, there has every 4 years, whether it is kind of part of the nature of Bitcoin or just circumstantial, there has tended to be these kind of blow off tops and then kind of crashes. I guess two-folded question. One is, do you think that cycle will kind of continue to a certain degree in this phase and since this halving? And if so, what do you think the most likely catalyst for that kind of crash might be?
So I don't think it'll continue. Historically, the impact of the halving of the production rate of Bitcoin has been large relative to the amount of Bitcoin in circulation, has, together with also other kind of macro factors and money supply, etc., contributed to this 4-year cycle where a cut in production rate has triggered a price rally. The price rally has had all these kind of feedback loop mechanisms, basically where the more Bitcoin rallied, the more people wanted in, the more people wanted in, the more it rallied.
Animal spirits,
and then
thing, right?
Exactly. I think in the past, for every cycle, there was a lot of people who were blocked from participating. It was really hard when I bought my first Bitcoin. I tried to open an account on Mt. Gox. I didn't use that. I used local Bitcoins, found a guy in Norway who was selling, wired him some money, got some Bitcoin back, held it on a wallet on my computer, didn't have a clue what I was doing. That was in 2014, 2013. But because of that hype, when we reached $1,000 for the first time, Coinbase, Kraken, all of these venues got the financing to build out really simple retail rails. That was enabled the bubble of 2017. And because of the bubble in 2017, CME launched futures. Fidelity built custody. LMAX built kind of LMAX Digital. You got kind of the first professional infrastructure being built out. Because of that infrastructure, the hedge fund guys could come in the next wave. Now the doors are fully open. If you're a nation state, if you're a child, if you're in a rich country, if you're in a poor country, if you have a smartphone, if you have a dumb phone, doesn't matter. Anyone in the world can now buy. So there's no more widening of the doors, really. I mean, there's some service providers that can get up the learning curve, etc. So we're not going to have this dynamic anymore where for every cycle, new type of players can participate. Secondly, now we truly have institutional participation. Until now, it was kind of an hypothesis. It was something that could come. And what is defining for the institutional participation is, as we discussed earlier, they are natural sellers when Bitcoin appreciates, and they're natural buyers when it falls because they're targeting a certain percentage allocation and they're rebalancing. That's deeply stabilizing. That does not mean that we will not have large swings, but I think the clear kind of 4-year cycle is a thing of the past. In terms of what will create the next crash, you really have to pay attention to, especially market structure, where leverage is building up, where fragility is building up, because there's no way around the Minsky hypothesis. Stability is destabilizing. There will always be business cycles, and similarly, there will be cycles in Bitcoin as well, but they will not be triggered by incrementally ever smaller and smaller reductions in production rate. I mean, they're completely insignificant now compared to the effect of exchanges selling Bitcoin they are earning from trading margin is orders of magnitude larger, or at least when activity is high on exchanges, for instance.
Yeah. So the price cycles, they'll still continue to be more in trend with kind of like, the standard human, animal spirits and the kind of over leveraging. And I guess in that case, it's also kind of good that we're getting these occasional kind of drawdowns that then wipe out some of the leverage, these smaller kind of
and one of the cool things is that Bitcoin and the crypto market more broadly is still going at like dog year speed, as in 7-8 years during 1 year in the traditional world. So the buildup goes faster, the wipeout goes faster, and then you have blank sheets and can continue on. It's kind of really a 8x faster financial landscape in this sector.
And it keeps it super exciting to follow on a daily basis. There's always new news coming out, always new excitement. So I'm totally with you in that regard. So before we wrap up, Torbjørn, for those that might be interested in getting in touch with you or learning more about K33, what are the best ways to get to you and to learn more about your business?
I mean, K33.com is the best place to learn about our services, what we do. You can find our research there. You can onboard as a client. We take clients globally. One of the main benefits is kind of our deep liquidity and FX flexibility. We're obviously present on X, and also I'm active on X and LinkedIn. So those are two good places to find me. Be, of course, careful to not follow any of the scam accounts. They're popping up like 4 every second day.
You've made it when you have bought replicate copycats.
Yeah,
right?
It's annoying though. It's annoying. But yeah. Should be possible to find a real one.
Fantastic. The one with the blue check mark, certainly. But we'll put your correct handle in the description, and not one of the imposters.
Yeah.
I wish you a really good day, Torbjørn. It's been great to talk today, and I hope to have you back on. Actually, one last question: are you going to be in Prague in November?
Maybe. I'm a bit uncertain. There's also a lot to do. We are finalizing our MiCA approval process with the NFSA. We have a lot of business development, a lot of exciting things coming. So we'll see if I have time to travel or not, but I'll definitely be on different conferences from time to time.
Okay. Hope to see you again in person sometime soon. Yes.
Yeah.
So enjoy the rest of the day. Thanks so much.
You too. Take care.